All right. What are some of the components? What are some of the components of cost of capital? What are some of the components of? We have three. We have three major components of cost of capital. Who can remind us? Who can remind us? Who can remind us? Specific component of cost of capital. Specific component of cost of capital. Specific component of cost of capital before we go to what? Our weighted average cost of capital. Weighted average cost of capital. Similarly, WACC. 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 Weighted average cost of capital. I'm very happy by what Jane is telling us, reminding us of cost of equity is a component, cost of preference share, and the last one is cost of debt. Cost of debt. Cost of debt. Yes, exactly. Peter has summarized KE, cost of equity, KP, cost of preference share, and KD. Class, hizo ndizo vitu muhimu. Ukishaelewa hizo vitu kwa hii topic, the formula za hizo vitu, like for example, a recap, I don't know whether we have a new student here, but for the sake of understanding, KE, cost of equity, as far as audience share is concerned, is given by DO, 1 plus G, divided by PO minus F minus D. F and D stand for flotation cost and discount respectively. And then you do what? You can add G, to simplify, to stand for the ordinary share and the retained earning. Remember, retained earning, we exclude what? We exclude the F minus D. So we shall see using an example. Then you multiply by 100. Of course, this should be given as a percentage. Then KP is simple. It's given by preference dividend. I'll show you how to compute preference dividend divided by PO or the MV. MV is the market value. PO represent the market value, and that is done. Then you multiply by what? By 100%. By 100 to make it a percentage. Then KD, we said class, we have two types of debt. That is irredeemable and redeemable. We said that irredeemable debt. This is very nice. Irredeemable debt, this is debt that has no what? It has no what? Maturity period. It does not have no maturity period. No maturity period, and therefore it's given by, you can remind me, interest. This is for irredeemable. Tafadhali, irredeemable. It's given by interest divided by market value or PO, and then somebody will tell you that you adjust for what? You adjust for tax. That is for the cost of debt and the irredeemable. So wakati umeona swali hajataja the period, number of years, 10, 20, 30, 50, like that, know that you're dealing with what? A debt that is not redeemable. A debt that is not redeemable. It goes up to infinity. It goes up to infinity. Then we have the cost of debt as a flotation or discount. KP. Okay, yeah. Sometimes by the way, you will find that the preference share, they can have flotation. So what you have to do is to reduce the market value with the flotation provided. So you take the market value, you minus the flotation cost. Yeah, we shall be looking at some of the illustration that will help us to do what? To understand more. Thank you for that question. So KD for the redeemable now, the one that has maturity period, KD for redeemable is simple. It is given by YTM yield to maturity. Then you do what? You adjust this for tax. You adjust with this for tax, 1 minus T. YTM. Now, the big thing is to understand or remember how you get the YTM, how we get the YTM. And the YTM, to get the YTM class, YTM, just recapping here, YTM, it's simple. YTM is simple. You get interest. You know how do we computed interest? Then you add, have to have this, YTM, interest. Then you add, what are we adding? 1 over n into bracket, 1 over n into bracket, per value of fair value minus market value, then divide by what? A half of this, but now the sign change. A half of fair value minus plus market value, and then that will be it. Now, this just start for YTM alone. You need to compute YTM alone. Now, if you want to get the KD of that, remember you have to adjust what? For tax 1 minus tax 1 minus. So KD ndio unakuja unafanya nini? Una adjust for tax. So is that recap okay? Is that recap good? Is that recap good? Have you now remembered where we were? Have I brought you to where we were? Have I brought you near? Are we now near to the weighted average cost of capital? Good. Now, that is good. So you have just to understand those. Unaona hizo maformula hizo, kaa ukijikumbusha venye zinaingia. Because once you find a question, hiyo formula tu ndio inafaa kukumbuka. Kishakumbuka hiyo, wewe hiyo swali uko sawa kabisa. Sawa. So let's look at weighted average cost of capital. Weighted average cost of capital. Weighted average cost of capital. You said that I think you had introduced, yeah, we want to look, you say that it is used to calculate the cost of capital whenever we are calculating historical cost. You introduced that, and we were to go to steps in calculating WACC. Steps in calculating. I hope you are good. Calculating WACC. Steps in calculating WACC. Steps in calculating WACC. Steps in calculating WACC. 1, it is used to calculate cost of capital. No. Calculate the component cost. The step number 1, it is to calculate the component cost. Wow. Sapa mshike tu vizuri. Ukishashika hapa uko sawa. Component cost, that is capital cost. Ya sasa hiyo ni capital cost ya KE, KP and KD. Hiyo ndio step number 1. Step number 1. Unaweza sema IE, easy. Then step number 2, calculate the weight proportion. Step number 2, calculate the weight proportion. Calculate the weight proportion of every capital component of every capital. Sasa nikiongea kuhusu capital component, kila mtu anajua ni hizi capital component. So tunatafuta ziko na uzito gani? Weight component, weight, uzito wake in the firm's capital structure, in the firm capital structure. That is very nice. Then step, okay, before we go to step number 3, there are some things you need to understand here. Just write NB and say i.e. or NB, we use the market weight. We use the market weight. When calculating the weight, we use the market value. You can say maybe the market value or market weight, market value. Say that, the market value, we use the market value. We use the market value, and then you proceed to say that market value are normally considered market value are normally considered in calculating WACC, in calculating WACC, because hii ni swali unaweza letewa sasa. Hapa tunataka tuone sasa majibu. Because of Roman number 1. Why do we use market value? Why do we use market value in computation of what? The WACC. Why do we use market value? The reasons are here. We are going to outline our reasons here. 1, investors acquire their investment. Use is how their investors. I know you people, we have great investors here. You have great investors here. When you acquire your investment, you acquire them at a market value. Acquire your investment at market rate. That's why we shall be using the market value when calculating this. Hence, to review such investment, unatumia nini? To review such investment, we require market value. So mtu akikuuliza kwa nini tunatumia the market value when computing the WACC, tell them this investor of the project that you're trying to look at, they acquire their investment at the market rate. They acquire their investment at the market, and therefore, when you are reviewing, you should use what? The same market, the market value. 2, assets used as collateral. Assets. I hope inaonekana. Yes, assets used as collateral. Collateral, unajua kwamba hizi ni kama guarantor. Collateral. To obtain financing, this is very interesting. To obtain financing are always valued at the market value. Varied at the market. I have to adjust kidogo about our camera at the market. So allow me to adjust kidogo. Sasa hapo wametupatia information very, very important. Wametupatia information which is very important. That information means a lot to us. That kama ni title D, umekuja kutumia kufanya nini? Kushikilia lori yako. We look at shamba ikiwa located mahali fulani inatoka pesa ngapi? What is the value of that? What is the market value of that piece of land? Therefore, if it is worth, remember it should be above anything that you use as a collateral. It should be above. Its value should be above the amount that you are taking, you are borrowing, right? Therefore, we look at the market value of that asset. Then 3, we have 3. The optimal value, Roman number 3, the optimal value, the optimal value, the optimal value, the optimal value, the optimal value are always historical value. Are always historical value. The optimal value are always historical value. Are always historical value. Are always historical value. Hence, it will be more realistic. Historical value. Hence, therefore, hence, it will be more realistic. It will be more realistic. It will be more realistic to use market value. To use MV. Tandika MV hapa. MV. To use market value. To use market value. So class, the three are important. The three are important. Wakati mwingine examiner atapatia theory 3 marks or 4 and ask you, why are market value used when calculating the WACC? Tell the examiner, because one, investor acquire those investment in market rate. Then the assets used as a collateral, they are obtained to obtain finance, are always valued at the market price. You see, the market value. And then the optimal value are always historical value, and hence it will be more realistic to use market value. We together? Are we together? Remember, that was just under step number 2. Ndio tumepause kidogo and then twende step number 3. Tuko pamoja hadi hapo? Kwa pamoja. Tunataka tuelewane vizuri. So we go to step number 3. Step number 3. Step number 3. Step number 3. Okay. All right. Step number 3, to then you multiply the component cost with their respective weight. Multiply, this is 3. So step number 3 ndio tuko pale. Tuko step number 3 sasa. Good. Step number 3. You were told you multiply the component cost. 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 You multiply the component cost with their respective weight. With their respective weight. Their respective weight to get the weighted component cost. To get the weighted component cost. Weighted component cost, to get the weighted component cost. Sum up the weighted component cost to get WACC. 4. Tutaifanya leo, sum up the weighted component cost to get WACC. Wow. You sum up the weighted component cost to get WACC. Okay. So the four are important. So let's look at an illustration. Illustration from our past paper. From our past paper. And first of all, open maybe this is let's have the two papers. Kwanza, May 2017. Let's have May 2017 hiyo paper, na tuna mwingine atoe November 2016. Hizo paper mbili. May 2017, May 2017, May 2017, na mwingine afungue November 2016. So I'm sharing May 2017, na mwingine ashare November 2016. You see. Haya, confirm kama umereceive hiyo ya May. Confirm if you have received that of May. Okay. Umereceive hiyo ya May. May 2017. I hope you have received that of May 2017. Have you received? Have you received that of May 2017? May 2017, confirm. Kama tumereceive hiyo. Confirm. Just give me a signal. Okay. Give me a signal. All right. Good. Go to question number. Okay, if you look at the theory mtafanya 1 A and B, hiyo mtafanya. I can see somebody has associated the other one. Let's go to part C. Let's go to part C. Look at question number 1C. Question number 1C. Question number 1C. In fact, I'll do it on this side. Number 1C, so this is May 2017. May 2017, question number 1C. Question number 1C, good. The question reads that Upendo Limited's existing capital structure is given as follows. Ordinary share capital, PANI 20, value is 20,000. Reserve, 10% debenture, 100 per, 10,000, value, 8% preference share, 20 per, and 15,000, that is value. Additional information, the most recent earning per share of the company is 5. Earning per share is 5. The firm adopt 40% payout ratio as its dividend policy. Ordinary share of the company are currently selling at 50 each. Good. The existing 10% debenture is currently trading at 110 over par at the security exchange. Existing 8% preference share are currently trading at 25 shilling each. Corporate tax rate applicable is 30%. Umepatia tax, okay? 30%. The annual dividend. Okay, sawa, ni sawa. Wanataka to compute what? The annual dividend growth rate using Gordon's growth model. Sawa. Cost of ordinary share capital. Cost of 10% debenture capital. Oh, tuko na debenture, by the way. That's why they have given us tax. Before we move, can you tell me, are we dealing with a redeemable or irredeemable debenture? Yes. Can you tell me, are they redeemable or irredeemable? This is very important for me. Yes, kuna debenture hapa. Kuna debenture. Are they redeemable or irredeemable? Irredeemable from Erastus. Where are the rest now? Wengine kweni waelewi hapa. Wengine hawaelewi hapa ama namna gani? Hakuna, hawajataja 10 years, 5 years. There is no maturity period. Therefore, that is direct irredeemable. Na sasa ikishakuwa hivyo, you understand the formula. Interest divide by the market value. Then you adjust that for tax. Thank you. Yes, irredeemable debenture. And that's why it's important to know what you are dealing with. Then cost of 8% preference share capital, then the weighted average cost of capital. If you look at that question, max kama 10 hivi, 10 na kitu, 10 hivi. So class, we can maybe start. So during getting the solution of this question, you'll be seeing other formulas coming in. So make sure that you embrace those formula. And if already you have a highlighter, of course, we had encouraged people to have a yellow highlighter. A yellow highlighter sometimes encourages you to do what? Ama wengine wanapenda pink. Wengine wanapenda pink. Wengine wanapenda pink. Highlighter. Wengine wanapenda purple pia. So if you have a highlighter, please make sure that you highlight this formula that will be coming in. This formula that will be coming in as we proceed. So in this case, I want us to find growth. Kwa sababu bila growth, kumbuka, hatuwezi tafuta KE. Kumbuka KE iko na G ndani yake. Nakumbuka ile KE, cost of capital. So without growth, we cannot be able to proceed together. And that's why they want us to do what? To compute the annual dividend growth rate using Gordon's growth model. Don't get scared for what they are telling you to use. It's just simple. So it's just say a G will be given by very nice formula here. Very nice formula here. G will be given by very nice formula here. I want you to get this formula and highlight it. Just highlight that formula. That to get, this is formula number 1, calculation of the growth. The growth tulisema inakuwa represented by G. G will be given by B multiplied by R. This one, G, will be given by B is lowering. Multiplied by retention ratio. Sasa, we have here ROI is our B. RR is our retention ratio. Retention ratio, we get it after knowing the payout ratio. From the question, additional information, what our payout ratio as a percentage? The payout ratio as a percentage. Hapa sasa, just to check what you have. What was our payout ratio as a percentage? 40%. So what is our retention ratio? What did we retain? We paid dividend 40% from our profit. What is our retention ratio? Tuli retain ngapi? Hiyo ndio meaning Hiyo ndio 60%. Thank you. Kwani wengine wako wapi? Yeah, thank you so much. Thank you so much Elasta. Thank you Masi. Yes, the retention ratio already sasa tumejua itakuwa ngapi? Itakuwa 100%. Retention ratio RR will be equal to 100% minus 40%, which will give me 60%. So already hiyo niko nayo. Sasa kazi iko hapa. We get our return on equity. Return on equity. For the person who is joining, we are under this topic of what? Capital structure decision. Under this topic of capital structure decision, we're looking at a question that was tested in May 2017. May 2017, of course, question number 1C. Good. Having known that, having known our retention ratio, we want to move forward. We want to move forward and compute our ROI, our B. Remember, this is return on equity. Return on equity. Return on equity. So the return on equity, nani anaweza nipatia formula ya return on equity? Our shareholder. What is the ratio? What is the ratio of our shareholder? Ni nini wanagawana? Hivyo ndivyo unajiuliza. Return on equity. You have invested in a certain circle. What are you expected to get? Return on equity. What will be our return here? Return on equity formula, of course, they will be dividing what? Sharing what? The net income. So itakuwa given by net income divided by what? What do we divide by? Shareholders' equity. Shareholders' equity, and that will be very nice for us. Be very nice for us. Are we given earning per share? Can you check from the question? Are we given earning per share here? Are we given earning per share? Because for us to get net income, lazima kwanza tuangalie kama walikuwa na earn. Kwa kila share walikuwa na earn pesa ngapi? People are giving me, yes, we have 5 already. We have 5. So, how do we get our net income? I think I need to utilize this place vizuri. Yeah. How do we get now net income? Net income. It will be given by, what do you say? Net income given by earning per share times what? Times the number of share. That will be the net income. Earning per share times number of share. Knows. Number of share. Earning per share. This is earning per share. Sasa hizi ndizo formula nawaambia zinachomoka as we do the question over number of shares. Number of shares. Hii swali examiner alikuwa ameshika hao watu mateka kabisa. Shaisikia kushika watu mateka because you have to be able to understand how you do get number of share. So class, as for you can give me the number of share. Nyinyi mnajua because I told you kuna vitu tatu niliwaambia kwamba you cannot go to FR class ama FM class bila kujua how number of share, then number of share, value of share, and power value. If you remember this, you are safe. If you don't remember this, there is a problem. Can you people give me the number of share here so that I get my net income? I need to get my net income. Give me the number of share. Already I have my par. Number of share napewa 100,000. Okay, 30 eliminated. Let's eliminate the 30. People are giving me 1,000. Rastas 1 million. Yes, okay, include the remit, but let's just remove the 30. So people are giving me 1 million. 1 million of which is 1,000. Since we have the value of share and we have the par value, you take the value of share divided by what? The par value. As simple as that. Please, hizi tatu. Ukienda kwa hiyo mtihani tafadhali, if you don't know this, tafadhali, prepare vizuri. Prepare vizuri for the next. It is important for you to understand that. So it will be 5 times what you have given me as number of share notes is 1,000. So my net income is 5,000. What am I remaining now? Shareholders' equity. What is the value of our shareholders' equity? See, you already tuko now, by the way. Shareholders' equity sasa. Okay, Princess anasema to pardon. Princess, value of share. Angalia pale tuko na the ordinary share. Ordinary share ndio inatusaidia hapa. Ordinary share. What is the value of our ordinary share? Value ni what do we equate to our ordinary share? Hiyo ndio value we are giving our ordinary share. Whatever, 20, given us 20 what? 20,000. Can you see 20,000? Just look at ordinary share. 20, ordinary share, Princess, are you there? Can you see 20,000? That is our value of share. 20,000, 20,000. Then, in the bracket, wewe unapewa, whatever that you're given there in the bracket, hiyo ni per value. Per value, na wametuambia ni mbao. Per value ni 20 shilling per share. Now, if you want to get the number of share is equal to your value of share divided by what? The par value is 50. That is how people are getting 1,000. Are we together, Princess? Are we together? We together. So the shareholders equity, sasa tuko nayo hapo kama 20,000. That is our shareholders equity, 20,000. So we are able to get our ROE. Our ROE will be equal to our net income divided by shareholders equity, which is 20,000. So itakuwaje? In fact, now this one we will express it as a percentage. Wengine wataiacha as a whatever. What will be? Pardon, net income formula. Net income formula, Margaret, just write and say net income is given by earning per share multiplied by number of ordinary share. Yes, it's been given 25%. 25%. So that's our that is our ROE. That is our B. That is our B. 25%. Now, can we get our G? Niambia kwamba hii formula ni muhimu sana. Can you get G for me? Now. Get G for me tafadhali. Get G for me. Get G for me. Margaret, I hope tuko pamoja sasa. Get G for me. Everyone is now getting G. Once we get G, we are good. We are good now. We are good. G for me. Get G for me. Haya. G ni 15% from everyone. Aha. G kupata ni rahisi. B is 25% times 0.6. Unaona? Na hizi ni za percentage. So, inaona watu wanipatia 15% because my retention ratio was this, which is 0.6. So our G, now we have it. Sasa mimi nikiwa na hiyo G, I'm good to go. I'm good to go to Roman number 2. I'm good to go to Roman number 2. I want to compute what? The cost of ordinary share. Cost of ordinary share. Sasa. Hii cost of ordinary share itakuwa ngumu kwangu kweli? Cost of ordinary share itakuwa ngumu kwangu kweli? Hapana, haiwezi kwangu. Nilisema kwamba it is KE given by DO. DO. 1 plus G, sawa, divide by PO plus G. In that case, hapa hatuna mambo na flotation. Ama hivyo. Do we have flotation here? Do we have discount? Do we have these things? Tuko nazo kweli. Mission. Ama hivyo. Mwalimu, so that's Gordon model formula we have used there, right? Yes, exactly. Now, that's Gordon method. Using Gordon method. So, hii tutaipata kwa dividend decision. Unaona sasa hapa inatuonyesha how the dividend are shared. Dividend payout ratio, and so then we get the retention ratio like that. You get? Yes, we have used the Gordon method. Asante. So, this is our formula. We don't have rotation hapa, hatuna discount. What we don't have plus is our DO. DO tulisema ni current dividend. Current dividend. Whatever that we have here, it is what? The earning per share. So how do we get the current dividend? Oh, who can guide us here? What do you think we shall do to get the current dividend? Current dividend. Tuko na earning per share. Current dividend. Si sasa ni hiyo earning per share times the payout ratio wenye wana. Simple, as simple as that. So to get the current dividend, when given the earning per share, you just take the earning per share times what? The payout ratio. So our DO will be, I don't know whether it's not visible. I have to adjust it, or I just use here to divide by DO. DO will be given by EPS times payout ratio. In another formula. In another formula, imekuja. In another formula that you need to use your highlighter. By the way, how many people bought the highlighter? Kwani highlighter pesa ngapi? Sinimbao. Okay, ukinunua na lite wanakuuzia 50. But if you buy 6, ukishikana watu 6, ununue hiyo packet ya 6, unauziwa 50. Is it 50 zote ama 100? Kitu kama hiyo. Zote. So this is another formula that you need to. DO, when you have payout ratio and when you have EPS, it's given by this formula. So can you compute for me the DO? We need DO ili tuweze kusonga. G tuko nayo already. I have G. My market price niko nayo. Nakumbuka nilisoma mahali market price already. The ordinary share. That one I cannot struggle. So give me the DO hapa. Yes, DO. Wow. These things are very interesting. These things, my friend, unless you don't want to get them, this is inakuwa very interesting. Who's getting DO for us? EPS ni 5. So I just have to pick 5. I don't even need to adjust my board. Just have to rub here. What is our DO? What is our DO? Somebody is giving us the DO. Napewa 2. So DO simply watu wanafanya hivi, DO yetu is equal to 5 times 0.4, which will give you 2. Shilingi mbili. Now let's get the KE. KE will be equal to 2 into bracket 1.15. Of course, this is my whatever. Divide by PO. What is our PO? Market value and the ordinary share. Enda tu kwa swali additional information usikize wenye examiner anasema. What is the market value? Additional information number 3. Angalia. Ordinary share of the company are currently selling market value at what? 50. So tungekuwa na nini tungetoa, but sasa hatuna, tunaweka tu 50 plus our what? 0.15. Of course, whatever that you get there, you put it as a percentage. Times 100. So what is our KE? Remember, sasa hii ni step unafuata pole ili tuweze kupata wakaka. Our objective here is to get to wakaka. Haya. Can you give me my KE? Kwa nimemalizana na KE. Mwingine ataiacha ikiwa in decimal, mwingine as a percentage. That's okay. We'll align to the same thing. KE ni ngapi? 19.6%. Thank you, and thank you so much. Thank you, Erastus. Thank you, Edward. Asante. Then we go to Roman number 3. Roman number 3 wanataka cost of debenture. Hii tafadhali, mimi nataka niwapatie hii mfanye jameni. KD jameni, we say that this is irredeemable debenture. Tafadhali. Irredeemable debenture. It has no maturity period. Please attempt. I know you have 2 books. That one we agreed when we were starting the semester. You have 2 books. For the other book, tafadhali, hebu jaribu compute hii. Pima akili yako sasa. Jaribu compute hiyo. So unakupatia dakika ngapi? The 3 minutes. You try to compute the KD and KP. Hebu jaribu. Uko na formula, uko na kila kitu. Just try. Wengine wako wapi? Wengine wako wapi? Where are the rest? Where are the rest? Can you give your answer there? You give your answer there. This is very good. Where are the rest? Can you give your answer? Can you give your answer? Wow. We say that KD for the irredeemable is given by interest over PO. And then remember this one, you adjust for tax. 1 minus T. 1 minus T. Let's see whether Oriv has it. Let's see whether Oriv has it. Oops. So if we have first of all to check what we have here. I can see we have 100 as our power. 6.4 kp. KP. Really ametupatia 6.4 kp. So our interest rate in this case is 10%. So you just take 10% of 100. 10% of 100. That will give you what? The interest. And then we are told there additional information is PO same as MV. Market value is PO same as Terry ameuliza swali nzuri pale. Wacha tuone our CO, our PO, our market. Yes, ni market value. Hiyo ndio market value. Na tumeambiwa ni 110% of par. So si itakuwa 110. Kwa sababu if it is 110% of 100, si hiyo itaremain kuwa hivyo, and then we adjust 1 minus 0.3. 1 minus 0.3. So this will give us what? So basically here we'll be having hapa tutakuwa na ngapi? 10% of 100 itakuwa 10. Divide by 110 times 0.7. Unapata ngapi? Haya. Wacha tuone sasa wenye walipata hiyo KD. What is our KD here now? As simple as that. KD yetu ni ngapi? What is our KD? Somebody is giving me the KD palette. Patia KD very fast so that we go to KP, then we get the total, the weight to push. Somebody is giving me the KD now. Calculator zetu. Engage your calculator. Just engage your calculator to save on time. 10 out of, so ni kama 1 over 11 times. So it is 6.4%. 6.4%. Asante. 6.4. 7%. Angalia this is 0.7. Angalia vizuri hapo 6.4%. So then we go to the fourth thing is a cost of preference share, as simple as it is. Cost of preference share. Hiyo tunaita KP. So KP ni rahisi pia. KP, it will be equal to the preference dividend, and to get our preference dividend tunachukuaga the 8% yenye tumepewa pale times par value times par. I think hapo ndio watu wamekosea, times par, but nimeona kuna mmoja maybe amepata times par divide by what? Divide by the market value. What is our market value of preference share? The market price of preference share. Market price of preference share. Just check additional information. 25. Cost what you get, you now do what? Times 100. So what is our KP? So that we go now, we get to our next thing. What is our KP? Somebody to give us our KP now. KP now to 1 decimal place. 6.4. There's somebody who got this. Kuna mtu alipata hiyo. Asante. So that is our KP. Our next step, class, our next step is to compute the to get the weight. The weight now, the weight, so that we get to the other thing, to get the weight, compute the weight. So for example, if we start with the acha tuseme proportion or weight, proportion or weight. If I look at what we have here, ukiangalia what we have here, we have ordinary share. By the way, mbona hamjaniuliza, mbona sijaguzia kitu kama reserve na nini? Why haven't I used the reserve? Why haven't I used the reserve? Why haven't I used the reserve? Remember what we said, what you're dealing with here under WACC is the historical value, and therefore reserve will not affect our what? Reserve will not affect our WACC computation. So hiyo itatumika kwa WMCC. So I have ordinary share here. Ordinary share. Remember, I want to get the proportion. Ordinary share, and I have debts, debenture. I have debenture hapa. And the other one, I have what? What else do I have now here? I have preference share. So if I want to get the weight of this, okay, the reason why we don't use the reserve. Remember, reserve ni kama retained earning. Nimesema kwamba retained earning is not recognized. It is not recognized as far as computation of the WACC is concerned. But retained earning will be recognized when we shall be looking at WMCC, weighted marginal cost of funds. Now, I want to get the proportion. So I have, first of all, to get the value of my ordinary share using the current price. The value of my ordinary share using the current price. The current market price. Using the current market price. The value of my ordinary share using the current market price. So I have the par value, or the value divided by the par value times the current market price, which is 50. What is the value of my ordinary share using the current market price? Itakuwa this one. Then debenture, you do the same. Debenture value yake tuko na nini? Value yake tuko na 10,000, si ndio? Value ya 10, debenture ni 10,000. Can you see that? Debenture, yes, ni 10,000, right? So it's its value using the market price itakuwa, you convert to share this one. No, it's 100. Then you multiply by what? 110, which is the market price. Then you do the same for our this one, 50,000. Divide by the par is 20. You multiply by 25, which is the current market price. So give me the value of ordinary share. Remember, tunataka tujue proportion ya each component kwa hii our capital structure. Value of ordinary share ni ngapi? 5,000. Is it 5 or 50? Ni 5 ama ni 50? Ni kidogo ama ni mingi? 50,000, right? Hii ni 50, eh? What about hii? Hii tutoe hii na tutoe hii. Itakuwa 11,000, eh? Nipatie hiyo ya hapa ya preference share. Preference share ni ngapi? Value ya preference share, somebody. Preference share value ni ngapi? 18,750. 18,750. Somebody who can remember the concept of getting proportion. If I want to get the proportion of something, I have, first of all, to get what is the whole thing? What is the whole thing ikiwa yote ni ngapi? And then to subdivide, I just use what that proportion stand for, divide by whole times 100. And okay, you can multiply by 100 or you can leave it. So to get proportion, hiyo ndio concept tunaleta hapa. For example, can somebody tell me what is our whole structure? What is the value of our whole structure? Na structure yetu iko na debenture, iko na ordinary share na iko na preference share. What is the value of our whole structure? Unaichukua in that way. What is the value? 79 na 750. Hiyo ndio nasewa. Is everyone getting that tafadhali? 79, 750, 79, 750. 79, that is our whole structure. Structure yetu, the value of our business hapa, the structure is 79, 750. 79, 750. Now I want to get proportion of what? Of ordinary share in this. Sintachukua this 50,000, hiyo ndio inashikilia ordinary share, divide by this. Haya, nipatie hiyo proportion. Patie hiyo proportion. Patie hiyo proportion. Hata hakuna haja tushinde tukiweka as a percentage, wachana kuweka percentage. Tupatie tu proportion. To two decimal places. To two decimal places. Proportion. Two decimal places, 50,000 divided by 79, 750. Hiyo ndio 0.63. Hiyo ndio proportion. 0.63. Haya. What about hiyo ingine? Debenture proportion inatupatia ngapi? Debenture. What is the proportion in our structure? Debenture inasimamia kiwango gani? 0.14. Haya. What about preference share? Asante. Preference share inasimamia kiwango gani? Preference share inasimamia kiwango gani? 0.24. 0.24. So 63% in the ordinary share of our whatever structure. Business structure is ordinary share. 14% in the debenture, and then 24%. Have you understood? Have you understood how we are getting the proportion? Watu wengi wanasahau kuconvert hapa kwanza into the current market price. Muhimu, the current market price, convert here, and then you get the proportion of all, of the whole, proportion of a whole, proportion of all. Are we together? Are we together? Now we are getting to our wakaka now. We are getting to our weighted average cost of capital. Are we together? Are we together as far as computation of proportion is concerned? Are we really together? Are we together? As far as computation of our weight or our proportion is concerned. Good. Now, to give you the simplest way to get our WACC, nitakupatia ile njia rahisi kupata WACC tu. The last thing is to get WACC is given by, tuchukue KE, you multiply it by weight of equity, you add KD, you multiply by weight of debt, plus KP, you multiply by weight of preference share. Ukishafanya hivyo, you are done. Wachana na wengine wanakuja kuchora table. You ina waste your time. Sasa unanipea KE. Patie KE. Cost of equity tulipata. Ilikuwa ngapi? Nipatia za percent. Ilikuwa 0.196 times weight of equity 0.63. Of course, at the end to convert that one. Then plus cost of debt ilikuwa ngapi? 0.064, right? 0.64. Is that right? Weight of debt 0.14. Plus cost of preference share ilikuwa ngapi? Somebody to remind me. Cost of preference share ilikuwa ngapi? Cost of preference share, I think it was the same as that of debt. Equally. Cost of preference share cost of preference share to recompute. Was this the same as that of, yes, it was the same. So 0.064 multiplied by 0.24. Give me this. Ya kwanza hapa hapa. Tia hiyo. So hii pia wale watu wa highlighter mimi ningetaka kujua wenye wako na highlighter hapa. Highlighter. During my time hiyo ilinisaidia sana. So from experience I know that. Sasa nikishaweka hivi hii formula hivi, wakati nime highlight yellow ama whichever color that you like, wakati una revise, my friend, hii picha inaingia kichwa vizuri. Okay, give me this. Ya kwanza, what do we get? Multiply this as we move. Hey, we engage your calculator. We watu mna relax wakati tunataka kumalizia. Hapana relax. 0.123. 0.1. Next one. Next one. Ongeza hii. Remember at the end tutai convert as a percentage. Tutasema percent. Sini kumultiply tu by 100. Haya, patie hii ya pili. Maybe to 3 decimal place. Anje sasa 8.96. Sasa teri umetumia the whatever kama itakuwaje? Tuweke 0.896 ama 0.896, ndio? Kwa sababu sasa hapa tunataka kuiweka in that 0.896. Tuweke hivyo 0.00896. Hai, decimal points zimekuwa mingi tena. 0.00896. Ai, hizo zero ni mingi nyingi. Niko sure? Ai. Hey. Okay, let's see. Haya, endelee. Acha ni multiply yangu nione pia. Haya. Twende kwa hiyo ingine ya mwisho. Pia ni nataka ni multiply hiyo. Naona imekuwa zero mingi. I have to multiply. Ya mwisho 0.015. 0.015. So somebody is adding all this. Somebody is adding all this. Yeah, that's okay. So add all this, and that will be our wakaka. So plus. Mmepata ngapi? Toto. Mmepata 14. 15. Weka 2 decimal place ni sawa. 15% sawa. Okay. Tenione na mimi 1 decimal place, 2 decimal place sawa. 2 decimal place ama 1 sawa. Yeah, okay. All right. 0.0896 plus 0.123. 14.7. I'm getting 14.7. Yes, 14.7%. This is 0.147, which will translate to 14.7%. And that is, sasa, just imagine, you see, and the time value of money, walikuwa wanakuja wanatupatia the cost of capital. Cost of capital. Imagine inakomputiwa hivyo. Before they get that COC, the required rate of return. That is the way we compute our required rate of return of a company. Now, the cost of capital of this company is 14.7%. Cost of capital of this company is 14.7%. 14.7%. 14.7%. And that is how we compute what? The worker done. The cost of equity multiplied by the weight of equity plus cost of debt multiplied by weight of debt plus cost of preference share multiplied by weight. So getting the proportion hapa, watu wengi hu. So zile step ni muhimu sana when computing our weighted average cost of capital. The steps are very, very important. Very, very important. Always remember, you need your value, the value of that source of capital using the current price. So you convert, first of all, you get number of shares and then multiply what? Remember, as you do this, if I take 20,000 divided by 20, what I'm getting is number of share. Then number of share, I multiply with the current market price. That is what I get. Tuko pamoja class? Are we together? Are we together? Na hii huwa haiposi. Hii haiposi bana. Hii saa itakosa aje. Yani hapa ndio watu wengi huwa wanasahau that you need to get the value of that source using the market price. Muhimu sana, muhimu sana. Using that market price. So convert to number of share, then multiply by the market price. With that utakuwa sawa, utakuwa sawa. So that is it for that question. Kulikuwa na hiyo swali lingine watu wametuma pale kwa group. Let me look at it. Kuna hiyo swali lingine, sijui kama ni the same. November 2016, let's look. Tarikisam ametuma. Interesting. Yeah, it's very nice. In fact, what I would urge you, if you wanted to stick ikuwe huku, please, ebweda urudie kwa ile kitabu. Sisi tuko na vitabu mbili. Moja ya kurevise, moja yako ya kufanya mambo zako zote, na sasa hii yetu yenye unaandika hizi. Enda chukua, fanya hiyo swali bila kuangalia, then you mark for yourself. With that utakuwa sawa. Sasa hii yenye tumetuma hapa, let me see kama kuna swali kama hiyo pale. Hii 2016 kulikuwa na swali kama hiyo kweli hapa. Oh, question number 2. Sasa hii nayo ilikuwa disaster hii. Question number, if you look at question number 2. Question number 2 boy. If you look at question number 2B, yes. If you look at question number 2 boy, you can see what we have there. Tuko na reserve pale, wanapatia total reserve. Wanataka nini? WACC, yeah. Tunataka WACC. Question number 2 boy. Alright. Hiyo swali tuko dakika ngapi sasa hivi? 10 minutes. 10 minutes. Na swali iko na marks ngapi? 14. It's almost a complete question. The possible solution to a diverse selection. So tulisema kwamba ukipatana na theory, you just do that theory. When you get theory, you just do it. Just do it. Regardless. We enda Google, tafuta answer, jaribu ku understand. Today we want to ask people, by the way. Theory mmemaliza hizo topic 3. Nani amemaliza? Wale wamemaliza topic zote 3. Ni kitu kidogo concept ndio nataka ushike kwanza. Then we shall be looking at it. Tutaipitia sisi wote. Tutakuja tu hapa to discuss. Mwalimu aketi to discuss. Yani I just share as we discuss together. Because theory we have just to understand. You need to understand. Haina formula kama zenye tunaweka hapa. Nani amemaliza topic kupitia na ku make some short notes za topic zote 3? Somebody, wale wa 3 zote. Waanze 3 zote. 1. Wale wa 3 zote. Bado. Not yet finished. Haya, wale wa 2. Nani amemaliza 2? Because you should be systematic, right? Unaanza topic 1. Unaenda 2, 3. Wale wa 2, nani amemaliza 2? mbili. Imagine hizo si noti mingi. Hebu enda ufungue uone. Concept ndio unapata pale. Concept. Na sasa having done whatever that you have been doing, itakuwa rahisi to articulate. Oh, kumbe iko hivi, kumbe iko hivi, kumbe iko hivi. I'm in topic 2. Good. Thank you, Elijah. Asante. Make sure you are making some short notes zako. That's good. Topic 2, mwingine ako topic ya pili. Asante, Elijah. That's a big up. Topic 2 mwingine hatuwezi kuwa just one. One of 32. One of whole. Wana hiyo percentage gapi? Hiyo ni proportion inakaaje? Haiko sawa. Hata heli tukue na 20, maybe 20. Alright, topic 1. Nani amemaliza topic 1? Hapa sasa na expect kila mtu. Topic 1. Hapa I expect sasa kila mtu. Topic 1. Sami sawa. Sami Kori 1 amemalizana, so atakuwa akienda tu. Where are ladies? Ladies, where are you? Elijah sawa. Elijah lazima sasa aingie pale juu. Already Peter. Where are ladies? Ladies, this time now, you people, where are you? Lakini majukumu nayo, ladies nao tunawaelewa, majukumu nayo ni mingi. Anasoma mtoto bwana, yani zote zinamwangalia. So we understand, but we shall overcome. Let's keep on trying. Keep on trying. So the secret is, I can give you a secret. Ukiwa kwa kazi, kuna ile lunch hour. Wakati mwingine ilikuwa inanisaidia sana. Wakati uko busy sana, so the lunch hour can really assist you. Since you have it as a soft copy, you can utilize that 1 hour. Sijui kama mnapata hiyo time, ama tena hiyo time uko fixed. I don't know. But you can also utilize when you are commuting. Ukitoka kazi ukienda nyumbani, kuna hiyo time. Wakati wa jam, if you are not the one driving, you can still look at the notes. Hiyo itakusaidia pia, itakusaidia. Are we together? Our ladies, tuko pamoja. We understand. We really understand. You usually try a lot. Are we now together? We're going to create some time for at least tunajaribu kufanya kitu kidogo tu. Nasema kidogo ujaza kibaba, na at the end of the day utakuta kwamba ushafanya nini? Ushavuka the other side. Nataka tuende advanced level, tumalizane na hii kitu nayo imekuwa slave sana kwa watu. CPA slave. But wacha tukazane. It is possible. So hii swali, nikiangalia hii swali hatutaimaliza leo. Acha tuisome kwanza, tuelewe, tuone wanataka namna gani. Then we see Sunday Limited presented the following extract of the statement of financial position as at 31st October 2016. So we have equity, 5 nominal value. Sasa unaona par value wanakuambia nominal ili uchanganyikiwe. Ni the same. Tutaangalia topic 5 whereby all these par value, nominal value, all those values, market value tutaweza kudefine. Topic 5. That will be our next thing after this. Reserve, kama ni waka reserve, I rule it out. Kama ni WACC, you rule reserve out, or retained earning. We rule it out. Then long-term liability. Then we have 4% preference share, 1 nominal. So hapo hakutakuwa na change. Naona par value ni 1. Sasa when I'm looking at my PD, the preference dividend, imagine nitachukua tu hiyo 4% times 1. 4% times 1 divided by market value. Itakuwa rahisi sana. Haya, let me see the other one. Tunataka crack hivyo, so that utaenda ujaribu tuone itakuwa namna gani. 7% bond redeemable after 6 years. Redeemable. So Is it a redeemable or irredeemable? In fact, hapo washakwambia ni redeemable. So YTM inakuja to place. That is redeemable bond. Umepewa the period. Pewa the period. Then long-term bank loan. Long-term bank loan. Long-term bank loan of 200,000. Long-term bank loan of 200,000. Hiyo sasa haina anything, haina any percent. Question? Yes, ask. Okay. Princess, you can proceed. You can proceed with your question. I can as well unmute you, but on your end, probably you're not in a position. Number 2, 2B. Yeah, 2B. Unauliza swali. Ni 2B. 2016 November, question number 2B. So, your long-term bank loan, yes, itakuwa part of our capital structure. But nakuta kwamba hapa kama ni if I want to get the par value whatever it remain hiyo 20,000 it remain 20,000. So hata hapa unakuta kwamba upatiwi the market value ya hiyo. Unapatiwa market value kweli? Bank loan, umepewa information ya bank loan pale chini number 5. The bank has a variable interest rate that has averaged 4% per year in recent years. Sawa. So ordinary share of suddenly have ex-dividend market value of 47 per share, and the ordinary dividend of 3.63 per share has just been paid. Ordinary dividend. The following dividend have been paid over the past 4 years. Hii swali inahitaji time yetu tuiangalie vizuri. Dividend hizo. Then the preference share are not redeemable and have an ex market value of 40 cents. 40 cents per share. The 7% bond is redeemable at 5% premium to its nominal value of 100 per value. Bond have an ex interest market value of 104.4. So hiyo swali inafaa tuiangalie vizuri. Kuna some of the things that we need still to hammer in. Like to get maybe our current dividend, the way you get our current dividend, we shall have another format to get the current dividend using the additional information number 2. And then we are expected to do what? To come up with the weighted average cost of capital and then explain the 4 reasons why the cost of equity could be greater than the cost of debt. Higher 4 reasons. By the way, ukiangalia cost of equity, it's always higher than the cost of debt. Cost of equity is higher, 19.6%, 6.4%. So you can always maybe explain why the cost of equity is always higher than the cost of debt. Cost of equity is always higher than the cost of debt. So that is it. We can't just tufanye kazi gani. So we can go and just go and fable and try to do that question. Just go and try. Let's go and try. I think we did question hii ya Morakaya. Question 4C tulifanya. Hiyo ya Morakaya. We also did this question 5. We did question 5. Hiyo ya YTC, YTM. Hiyo tulifanya. So, tutajipanga kwa hiya yenye hiyo ya question number 2. Okay. Yeah, I think that is it. But if you get time, try to go through the theory na umalize sai paper na hiyo paper nyingine yenye tumefanya 2017. Theory. As you study. So hii weekend, hii time tunapatia watu kuweza kufanya nini? Kukua at par. Wale wageni wameingia, make sure that you are at par so that next week sasa kila mtu atakuwa mahali tuko na tutakuwa sawa. So this weekend hatuna anything that we are doing. We don't have class tomorrow. No. Wacha watu wafanye nini? Watu wasome. Be at par, finish the notes, finish making the short notes for topic 1 to 3, so that by next week Wednesday I can share now the other theory notes, so that at least you're able to know to do what, to cover these things on time. Otherwise, class, allow me to stop it at that point, but I give you time to do what? To go and search. Hebu enda uangalie swali lingine yenye haina hizo marks dividend na nini, kwa past paper. Past paper sasa uko nazo zote. Angalia swali na kai na tuma kwa group watu wafanye. I'll also look at a question that has all this. You attempt during the weekend. Otherwise, asanteni sana. Allow us to end our lesson at that point. Na Mungu awabariki. So goodbye. Unless kuna swali. Asanteni. So for the